Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color Podcast. This is a weekly podcast that is focused on Kenya's financial markets with the aim of providing you, the listener, with an up-to-date overview of Kenya's financial markets. And we attempt to do this by reporting on the performance of the major markets, ranging from the money markets to the foreign exchange market, and from the equity markets to the bond market. And in addition to that, we also cover any topical issues arising during the week. This week, we're reviewing the performance of the Kenyan markets during the 32nd week of 2022, and that is from Monday the 8th to Friday the 12th of August. And without further ado, this is your host, Jamhuri, and together, let's dive right in. As usual, we start with the global markets and a look at the US Consumer Price Index that measures the prices that consumers pay for a variety of goods and services. And this rose by 8.5% in the month of July as compared to a year ago. The pace of inflation appears to be slowing down compared to the previous month of June when inflation peaked at 9.1%. However, despite the dip in inflation, which was mainly due to a drop in fuel prices, inflation still remains elevated and way above the Fed's comfort level of 2%. Excluding food and energy prices, the core consumer price index rose by 5.9% annually and 0.3% monthly. The inflation report was also good news for workers who saw a 0.5% monthly increase in real wages. On Wednesday, the Chinese released their data on consumer price index, which hit a two-year high of 2.7% in the month of July. This rise in inflation was attributed to a 20% spike in the price of pork, which is a staple food in China. The UK economy contracted in the second quarter of 2022. Official figures published on Friday showed that the UK's gross domestic product shrunk by 0.3% in the second 3 months of the year. This comes after GDP expanded by 0.8% in the first quarter. Just last week, the Bank of England warned that it expects the UK economy to enter a recession in the fourth quarter of this year and projects inflation to peak at above 13% in the month of October. UK's economic growth is stagnating as the economy faces challenges from a severe real income squeeze on the back of elevated inflation and higher interest rates. Moving over to the US stock market, stock prices rose sharply on Friday with the S&P 500 recording its fourth straight positive week as investors celebrated signs that inflation may be cooling off. The Dow Jones Industrial Average was up 2.9% for the week to close at 33,761. The S&P 500 rose 3.2% for the week to finish off at 4,280, and the Nasdaq Composite surged 2% to close at 13,047. In the U.S. bond market on Friday, the yields on the longer-dated U.S. Treasuries ticked lower as investors sorted through a busy week of economic data. The yield on the benchmark 10-year Treasury note dipped by 5 basis points to 2.84%, whilst the yield on the 30-year Treasury bond also ticked lower by 5 basis points to 3.1%. In the commodities market, oil prices plunged around 2% on Friday on relief that supply disruptions in the U.S. Gulf of Mexico would be short-term. In the meantime, concerns about rising inflation and interest rates and the possibility of an economic recession continue to cloud the outlook for oil demand. After last week's 14% tumble, Brent crude was on track for a 3.5% weekly gain to $98 a barrel, whilst the US benchmark WTI, that's West Texas Intermediate, was on course for a 3.7% gain to $92 a barrel. Marban oil, which Kenya imports, increased to about $100 a barrel this week compared to $94 the previous week. The price of gold drifted higher on Friday, helped by a dip in U.S. Treasury yields. Gold was set for a fourth straight week of gains as investors took stock of the recent U.S. inflation data. The price of gold rose 0.6% to $1,800 per ounce and was on track for more than a 1% weekly rise. Moving over to the Kenyan markets, we start off with the exchange rates. During the week, the Kenyan shilling remained stable against major international and regional currencies. According to the Central Bank of Kenya, the Kenyan shilling was exchanging hands at 119.24 versus the US dollar compared to 119.03 the previous week. Against the sterling pound, the Kenyan shilling was trading at 144.88 and against the euro at 122.34. And against the regional currencies, one Kenyan shilling was exchanging for 32.37 Ugandan shillings, 19.56 Tanzanian shillings, and 8.63 Rwandese francs. Please note that whilst the Kenyan shilling remains relatively stable in the short term, over the longer term, the Kenyan shilling has depreciated significantly, especially versus the US dollar. For example, over the past 2 years, the Kenyan shilling has depreciated from a rate of 101.35 that was recorded on the 2nd of January 2020 to the current levels of 119.24, a decline of more than 17%. Looking at foreign exchange reserves, the usable foreign exchange reserves remained adequate at 7.68 billion US dollars, that is equivalent to 4.43 months of import cover. This is in line with the central bank's statutory requirement to maintain at least 4 months of import cover. However, we note with concern the significant decline in reserves from a peak of $8.81 billion recorded on the 30th of December 2021 to the current level of $6.8 billion, a decline of $1.13 billion in a period of just 8 months. This trend is definitely not sustainable. Moving over to the money markets, during the week, the liquidity situation in the interbank market deteriorated as tax remittances exceeded government payments. Commercial banks' excess reserves in relation to the 4.25% cash reserve requirement stood at 27.2 billion shillings. Open market operations remained active with the average interbank rate at 5.6% compared to 5.25% the previous week. During the week, the average number of interbank deals increased to 44 from 33, whilst the average value traded increased to 30.3 billion shillings from 20.9 billion the previous week. In the government securities market, the Treasury bill auction was held on Thursday, the 11th of August, and the central bank received bids totaling 17.4 billion shillings against an advertised amount of 24 billion shillings, representing a performance of 72%. Interest rates on all the tenors remained relatively stable, with the 91-day rate rising by 9 basis points to 8.56%. The 182-day rate ticked up by 3 basis points to 9.43%, whilst the 364-day rate remained unchanged at 9.92%. In the Treasury bond market for the month of